Hello and welcome to Startup Street. I'm Arundhati Ramanan, and with me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup space. Good Glam Group has completed the acquisition of Sora Hygiene for 450 crore rupees in an all-cash deal. The buyout also provides windfall benefits to Sora's employees through accelerated ESOP vesting.
Ozontel, a provider of unified customer experience intelligence platform, has acquired Cloud Connect Communications, a provider of mobile-first digital UCaaS solutions. Cloud Connect's TRAI and DOT-compliant UCaaS solutions is now a part of Ozontel's Onex platform.
Economy Process Solutions, a company specializing in vacuum and process solutions, has raised 100 crore rupees in a Series A funding round led by Stakeboat Capital Fund 2. The investment will be directed towards accelerating growth, expanding the range of in-house manufactured products, increasing the company's global footprint, and entering new categories, particularly in food and beverage solutions.
Social media platform TikTok is laying off hundreds of employees from its global workforce, including a large number of staff in Malaysia, as it shifts focus towards greater use of AI in content moderation. As per Reuters, less than 500 jobs were cut in Malaysia.
Tesla CEO Elon Musk showcased long-awaited robo-taxi with two gull-wing doors and no steering wheel or pedals, and surprised with RoboVan. Cybercab production to start in 2026 and to be priced under $30,000. Those were the headlines that we're tracking for you this evening. But the top story today, Noel Naval Tata, the 67-year-old half-brother of Ratan Tata, will succeed him as the chairman of Tata Trust. Noel Tata was unanimously appointed as the chairman at a board meeting today. This comes 48 hours after the death of Ratan Tata at the age of 86. CNBC-TV18 was the first to report on the Tata succession this afternoon. Ratan Tata's legacy goes beyond the businesses he built. After retiring, Tata supported more than 40 startups, lending his wisdom and capital to budding entrepreneurs. We spoke to some of those startup founders about their first meeting with Ratan Tata. Take a look.
I remember my first meeting with him was intermediated by someone we knew in common, and they just told me that an HNI in Mumbai wants to meet you. And they didn't tell me the name till the day before the meeting. And when I landed in Mumbai at night and the meeting was the next morning, they said it's Mr. Tata. You can imagine the kind of sleep I got that night. And when I showed up at his office the next day, he was running about 5-7 minutes late. And when he came, my heart just stopped, because I'd only seen him on TV and on newspapers and magazines, never seen him in person. And the first thing he did was he just profusely apologized for being late. And I was just wondering, why is he apologizing? He was like 5 minutes late, it doesn't matter. And instead of sitting behind a big desk, a big table, he pulled the visitor's chair and literally just sat right next to me.
I recall reaching his office. This was the Elphinstone building in Fort, and I expected a rather large office for somebody of his stature, but it was a humble, perhaps 1,500 or 2,000 square foot office on the second floor. A couple of employees and then himself. We met him. I think we shared our vision and the idea of urban company with him for about 45 to 50 minutes. I remember him patiently listening throughout that pitch and not interrupting at any point in time. Then he spoke words which I still very carefully remember. He said, "Abhiraj, Varun and Raghav, you are building something that India needs. Just make sure that you keep the quality really, really high, and the rest will follow."
So the first impression was of a man who looked at you equally, who treated you equally, who was present, who was kind. And over the years, the more I got to know him, I realized that what a man he was. And I've written about it, but one thing that I would like through your channel, everyone to know, very small thing, that he had a very bad knee pain, and I'd gone for a video interview, and I was just, after the conversation, I was getting up and going out. And I knew he was in pain, but he got up to see me off to the door. And I said, "Why, Mr. Tata, are you doing this? I can go." And he said that, a woman comes to my house, and I'm brought up like that. Like, I cannot not go and see you off to the door.
Ratan Tata, a true titan of our times, fondly remembered by one and all. Now, in what's brewing today, home furnishing startup Furnishka has raised 27 crore rupees in a pre-Series A funding round led by India Quotient. This capital is going to be utilized to advance product design and development, strengthen manufacturing and supply chain capabilities, and expand to new locations. Furnishka will also leverage this funding to expand product categories, open 6 large format stores, and create educational content for customers. Joining me now is Ganesh Pawar, the founder of Furnishka, for more on this funding and the growth ahead. Congratulations and thank you for being with us here on CNBC TV18. Start by telling us what proportion of this 27 crores that you raised will be directed towards expanding the product categories versus, scaling your retail footprint, and how much do you expect, will your revenue growth be impacted because of these measures?
So I can say half and half. Half of it would go for expanding our footprint, and rest of it would be primarily spent on optimizing our supply chain, developing new products. In terms of revenue, I don't have revenue target as such, but by next year end, would like to see 50-odd thousand happy customers in Bangalore and NCR, where we are expanding next.
All right, Ganesh, you have about 4 physical stores in Bangalore and a growing presence online. How are you leveraging this omni-channel model to capture a larger share of the market? And, what percentage of the sales do you expect to generate from online versus the offline channels where you're looking to expand?
So we are primarily in a premium furniture, and we strongly believe majority of the sales in premium furniture would happen offline. But even then, your online presence would be very important, because in the world of 2024, the time we are living in, the window shopping, I strongly believe, would happen digitally, not in physical stores, but on your mobile phone or laptop screen. So the first interaction of customer with the brand would happen on your digital channel. So a seamless digital experience would be very crucial, but the transaction, the final sale would happen in offline stores.
And Ganesh, could you give us a sense of where you're looking to open these stores? Is the focus very much on metros and tier 1 cities? You spoke about Delhi and Bangalore. Are there any other areas, and how many stores are you looking to open?
So we are planning to open 6 more stores, predominantly in Bangalore, and we are partnering with one more retail chain in NCR, and with them we'd be opening 2 more stores there. But primarily Bangalore and NCR as of now, and after that we'll like to expand in the tier 2, tier 3 cities around these 2 major clusters, that is NCR and Bangalore, say Mysore and smaller cities around Bangalore.
I see. I was reading that Furnishka's pricing model offers premium products at about 30 to 40% lower than competitors. So Ganesh, if you could walk us through the unit economics of this approach, and how soon do you project achieving profitability as you scale with the kind of model that you have?
So, depending on the products, we would be priced at 20 to 40% lower. This was primarily I say the value retail as such is a supply chain problem. I'm a supply chain person. When we started this business, I realized by optimizing the supply chain, we can definitely save 30-odd% of the cost on top. When you are a price leader, your marketing costs are lower, and your per square feet throughput could be as high as 2x, 3x your nearest competitor. Based on, if you add all these things up, you could practically be at a price point which is 25-30% lower on an average, and still make more money. This is proven worldwide. Costco has done that. Dio is doing that right now. So unit economics wise, of course, right now we are burning money. We are in growth stage. There is a lot of investment which is going in new product development. We are building large capacities which are underutilized at the moment. But I really don't see a reason Bangalore shouldn't be a profitable market for us in next 12 to 18 months.
All right. You've served about 10,000 customers in the year since you started operations in 2023. What are your key customer acquisition channels and how are you leveraging data to drive repeat purchases and improve the customer lifetime value?
Okay. So this category, as right now we are in loose furniture where repeat is not very high. I mean, you buy sofa once in 5, 6, 7 years maybe, but this is very high referral category, and we are lucky. Large chunk, almost 30-35% of our customers are referrals at the moment. We would add categories like in home furnishing decor, which have very high repeat, but those categories would be launched in 3 to 4 months. And our strategy is simple. I mean, the hardest category to get right in this space is furniture, loose furniture. If someone like you is happy buying a sofa, premium sofa from us, I mean, definitely for you selling bed sheets and other things should be much easier. But those product lines will launch probably 4 to 6 months down the line. Right now, our focus is on loose furniture.
All right. You're also looking to expand product categories, premium living room, dining, bedroom collections, and so on. What are the gaps in the current market you're addressing with these categories, and how will you really differentiate your offerings from competitors, given that you're just starting out in this space?
Okay. So I believe, so the primary gaps, at least what we have, if you look at this market structure, right, majority of this market is unorganized. And unorganized world offers two things primarily: price, very competitive price, and personalization. So we started this business when we started Furnishka. The question we asked ourselves is, can we offer the personalization at the price very close to the price which offline world is offering? And that's going to be our primary differentiator.
All right, Ganesh, we're going to have to leave it at that. Thank you very much for your time here on CNBC-TV18. Thank you.
Thank you.
And moving on, Vivriti Capital has raised a $25 million senior secured debt facility from the Asian Development Bank to lend towards its climate finance initiatives. The 4-year tenor loan is the first by an NBFC, which will be used to expand its green finance portfolio. Now, the proceeds will fund renewable energy projects and the electric vehicle ecosystem. The bond is being certified by the Climate Bonds Initiative, which essentially aims to enhance access to climate finance for financially underserved enterprises, including MSMEs, mid-market corporates, and retail clients in India. Joining me now to discuss this further is Vineet Sukumar, the founder and MD of Vivriti Capital. Vineet, thank you so much for taking time out and being here with us on Startup Street. Welcome back on the show. I've spoken to you before, but you've received this debt financing from the Asian Development Bank for your sustainable finance project, yeah? So Vivriti Capital Climate Finance Project is what the money is for. If you could elaborate on the kind of impact you hope to create via this fund, and how big is your green finance portfolio at this point, and by how much do you want to grow it using these funds?
So our green finance portfolio has built up quite well. We've been doing it now for the last 2.5 years. It's become around 1,500 crores of disbursement or thereabouts in this period of time. Very encouraging results. It's a fairly new ecosystem, so we have to tread carefully, but we have had very encouraging results in the solar ecosystem, the wind ecosystem, the biogas ecosystem, the waste to energy space, the electric vehicle space, the retail financing for such electric vehicles as well. It's been quite encouraging. I think this assistance from ADB is going to go a long way, because it's a great testament to the portfolio that we have built and the fact that ADB could see confidence in supporting us in this part of our business. And I'm quite encouraged that we can at least double the extent of work that we have done in this in the electric vehicle ecosystem and the renewable energy ecosystem so far.
Right. So, just to discuss these sectors further, you're saying that you have seen a great response to this. If you could sort of tell us how you plan to use the funds to support both enterprise and retail borrowers across these segments. What are the kind of companies you're eyeing, and what's the demand that you're already seeing at this point? If you could give us some numbers there.
Sure. So India's entire climate ecosystem has relatively mature parts, less mature, and fast growing, but not proven yet. Right. The first category, for example, is solar power, where we have a lot of history of well-run operators. But even today, the early stage of construction of a solar project lacks long-term project financing. And that's where a player like us could come in, right? The relatively less mature but fast-growing parts is the electric vehicle ecosystem. That's manufacturing, swapping, charging, as well as distributing electric vehicles of all kinds, two-wheelers, three-wheelers, four-wheelers, going all the way to commercial vehicles and buses, right?
Right.
And we are there across the entire ecosystem, seeking to build it from scratch, where the risk is around the replaceability of the vehicle after 3 years or 4 years and the battery life. And that's a risk that some players can take and perhaps the larger market cannot take, which is where we come in. And the least developed is absolutely new technology, right? Hydrogen, for example, right? Where it is a much more forward-looking call, maybe something that not even Vivriti can do today, but it's getting a little interesting for us to see how these models develop, and probably we can play a larger role in the times to come.
Absolutely. And, you know, a substantial portion of these funds, like you said, is going to go, about 30% of it is going to go towards financing the EV ecosystem, right? If you could elaborate on how big the opportunity is here.
So the EV ecosystem is growing rapidly, and it's gone through its trials and tribulations, right? The cargo three-wheeler segment, for example, is very significantly penetrated. So the acceptability of an electric vehicle is far higher there than in any other segment in the country, right? The bus ecosystem is building quite well with a lot of government support and incentives happening city by city by city, and the private sector is responding well. Right? Whereas the commercial truck ecosystem is far less developed. The car ecosystem is going through its own discovery phase of, should we do completely electric or should we do hybrid, right? And there is some work happening there. There is a tussle between charging and swapping. These are two alternative ways of looking at India. And as of now, I don't think anyone is taking a side on which side will become more relevant over the years to come. We have done some work on both sides. Yeah, so the electric ecosystem is looking very, very, very interesting. Finally, there is the retail purchase. An electric vehicle is naturally more expensive on day zero as compared to an ICE vehicle of any kind, 2, 3, 4, 6, 8-wheeler, etc.
Right.
And therefore, financing plays a crucial role in bridging the gap between a borrower aspiration or a buyer aspiration and the cost of the vehicle. So we will play a role in all of these pieces.
All right, so you're looking at playing a role across the ecosystem there. But, you've built a lending portfolio between, both your companies of over 11,000 crore rupees, right, for over 400 clients. So what about NPAs? Where do they stand? And what are the future growth targets? Where's the next leg of growth coming from?
I think if there is one thing that's been very encouraging in the last 7 years of Vivriti's building scale, it's NPAs, frankly. Because the quality of the book is everything for a lender. We've been at under 0.5% of cumulative credit cost since the day we began. And that's a pretty strong statement. It gives a very clear sense that the segment that we are in has quality, and the processes that we are running are able to really find the best of the best within the ecosystem that we work in, which is essentially mid-corporate India, right? And this has given us a lot of confidence that despite funding winter and, whatever else the market has gone through, a steep rise in interest rates, we have a lot of growth ahead. My own assessment is that for the next 3 to 5 years, we should fairly comfortably see a 35% CAGR in terms of the assets under management that we run with, and possibly hit 1,500 to 2,000 portfolio companies in 3 years from now, and continue to grow that. India has a base of 19,000+ mid-corporates that we can actually access. So even 5 years from now, even if you are very, very successful, we will still be only at 1/6 of that market. So that gives you a sense of how far we have to go.
Right. So big, huge growth opportunity there. All right, Vineet, thank you so much for taking time out and being here with us on Startup Street.
Take care.
Okay, on that note, we're going to take a short break, but don't go anywhere. And up next, Unscript.ai has outshined Google Vlogger and OpenAI Sora for creating studio-quality videos from photos in minutes. That and more when we return.
back. You're still with us on Startup Street. Bangalore-based AI startup Unscript recently outshined Google Vlogger and OpenAI Sora, creating studio-quality videos from photos in minutes. How has the company managed to achieve this feat using generative AI? My colleague Aishwarya Anand finds out from Unscript.ai's founder, Ritvika Chaudhary, on the sidelines of India Internet Day, hosted by the Delhi NCR in collaboration with CNBC-TV18. Take a look.
So we generate studio quality lifelike videos at scale for different enterprises and B2B customers. So these are basically the kind of videos we create is, let's say a big company is there and they have to create a video with an actor or a creator. They go take their consent, they do one-time shooting with them, but with that one-time shooting, we can create a digital twin of them, right, of that particular creator. We can mimic their voice sync, like their voice, their lip syncing, their expressions, how they move, everything, of course, with their consent, right? From there on, creating videos is as simple as just entering a script. Let's say you want to create a video, right? You just enter the script that you're having this interview, just give the interview script, and you can generate the videos in your face, in your voice, with perfect lip sync. It look like you are speaking when you actually never shot that video. That is what we are doing, right? And these are very useful for marketing teams because and L&D teams are the two major customer segments that we have, and they keep creating different kind of social media videos, product marketing videos, marketing campaigns, personalized videos. Even in their flows, they embed videos instead of text, right, which people don't read anymore. Now, recently we have launched an image to video model. You can take definitely just a photo of a person, for example, your photo, and can start generating videos from there on. By the way, we also created these models which are very specifically, of course, it can cater to a global audience, and we have customers all over the world, but they're very specifically trained for Indian ethnicity as well. So we have the best lip sync for Indian ethnicity.
And if I have to understand from you that, what does your monetization model look like? Like per video, how much money are you making?
So we do not, our monetization, we are a SaaS company. So our monetization is really subscription based. So we have different packages in which you get certain number of videos, but most of our subscriptions are actually unlimited videos, right? But depending on the need sometime. But overall, your video cost would come out to be maybe $3 around per video, $2 to $3. At volume, it will be even lesser. So yeah.
Okay. You're also one of those 7 selected startups for Amazon Web Services global AI program. So I want to understand from you that how do you plan to leverage AWS's infrastructure?
Of course. So a lot of things, right? We were using AWS already, right, beforehand, and now we got selected into this great program. So there are so when we train these models, it's a lot of GPU compute that it takes. Like, okay, so it's like we spend a lot of money just on training the new AI model so that we can be up to date and we have the best outputs forever, right? So definitely, I think I'm gonna use their credits and GPUs a lot and also we'll have access to GPUs, which is also difficult to find usually nowadays because there is some GPU shortage, which is solvable and will get solved soon enough. The pipeline is there, but yeah, definitely because of the GPU shortage, sometimes it's difficult to train and our pipelines get delayed. But now with access to this, we can train our models as it is and however we want. So probably we'll be able to roll out even better models now.
All right, it's Friday and it's time to look at all the deals that happened over the week. A total of 20 deals were signed this week with an overall value of $120 million. Here's a breakdown of some of those prominent transactions. Now, industrial automation firm Haber Water raised $38 million in a Series C funding round led by Craigus, Axel India and BNext. Physiotherapy-focused Spy Therapeutics has raked in $15 million from 8 Road Ventures, Flourish Ventures and other investors. And meanwhile, hygiene products maker Millennium Baby Cares has roped in over $14.5 million from Bharat Value Fund, which is managed by Pantomath Capital. Vacuum systems provider Economy Process Solutions has also raised about $12 million from Stakeput Capital. And lastly, space tech company XT-Links has raised $7 million from Ashish Kacholia, E2MC Ventures, Mana Ventures and other investors as well.
So lots of action there from Deal Street in the startup world. But with that, it is a wrap on this edition of Startup Street. From Ritu and me, goodbye and many thanks for watching.